Hello, good evening, everyone. I'm CA Gautam Lat. I welcome you all for our next session today, which is on infra and works contract. So GST issues in infra and works contract. So I'm sure I'm hopeful that all of you are enjoying this sectorial series. Today's session was supposed to be taken by CA Sagar Saab, but due to some limitation, family emergency, he couldn't do this. So we are really thankful to Neeraj today, our session speaker, that on such a short notice he has agreed to share his views and experience with us. So we will be hearing Neeraj today. Just to introduce that, Neeraj is a partner in Ernst & Young LLP with about 20 years of professional experience and has written and presented various papers on topics of professional interest before various forum bodies like WIRC, ICI, and other professional bodies. His subject of special interest were manufacturing, real estate, infra, multi-state VAT before the implementation of GST in India. Apart from assisting various clients for implementation of GST in India, he has also played a vital role by assisting EY Saudi Arabia in implementing VAT for its client over there. He has also assisted late Sri Shantilal C. Shah, who had authored a treatise on the Maharashtra Value Add Tax Act 2002, both for the first and second edition. He has been working closely with companies to assist them in advisory litigation under indirect tax, including GST, custom, and FTP. By qualification, Neeraj is a BCom and FCA. With this brief introduction, over to you, Neeraj, for the session.
Sure. Thank you so much. And I just want a confirmation that the slide is up and running. Somebody can confirm that, please.
No,
सर वापस आप शेयर करिए, मैंने बंद कर दिया था वापस.
ठीक है. Once.
We can see it now.
Yeah, we can see it now. Great. So very good evening to you all. And as Gautam did mention about, so sort of the last minute entry that I am trying to fill in place of Sagar. I'll try to do my best because as you all would agree that, when it comes to infra and works contract, it itself is such a huge and white elephant that the complications and interpretations are something that will always be challenged, sought after, or even litigated to the maximum extent possible. So in the sectorial series that we are running, infra and works contract, if you typically see the way, let's say, India as a nation is looking at infrastructure, structure as such, if you could say, it won't be wrong to admit to say that the good amount of focus is on this particular sector. So much so that to steer this Indian economy further under the aegis of PM Gati Shakti, the union budget had actually allocated a good 35% jump in its previous years, this in terms of the investment that it wanted to do. So something that was around 5.5 lakh crore, it had now budgeted 7.5 lakh crore of budget towards this infrastructure. So that itself speaks volumes of what this sector is there to offer, what is going to happen in the next year. And even if you remember, this PM Gati Shakti is something that they wanting to keep the foundation strong for the next 25 years. So this sector, if you really look at it, is somewhere here to stay for a good couple of decades or more, if I may say that. Typically, if you look at the infrastructures, what the government is probably hinting at more so is in relation to your roadways and ropeways, and also the capacity from a solar plant standpoint. So this is something out of quite a few that the government is probably focusing on heavily. It is also opening doors for a PPP model where both the private and public partnership model will come into play. If you also see, which we will cover in due course, typically when we look at any NHAI contracts, where the concessionaire is now getting into PPP model, and there the government also wants to play a role in terms of funding the whole project. And all of that things is something that the government is keen, and which is why this sector becomes extremely important for us. What I would want to do is, I know we all are aware of this, and I would just quickly, I'll just quickly walk through. We all are aware of this, Under the erstwhile law, we know that we had customs duty on imports, where typically the effective rate was around 29.44%. We had excise duty on manufacturing. Peak rate was around 12.5. We have service tax at 15. CST also at concessional rate at 2, and then the local rate that would be applicable. These were the central taxes that were there. State levies, if you see, we had VAT, which ranged anywhere between 1% to up to 15% as well. And also we had entry tax, LBT on octroi, typically in various states, which again, depending upon the goods, it was from 1 to 8% it ranged. So we all are aware this was the erstwhile regime that we had. And what eventually we have done is all of this has now been subsumed. The typical design, we know, a dual GST. We have certain exclusions here, and little critical would be like a stamp duty or, maybe alcohol for human consumption, and excise duty and VAT on petroleum production, tobacco, and so on and so forth. GST, we are aware, it's a destination-based tax. We have state-level compliances. The whole idea basically was to allow free flow of credits from center to state. We have seen all of that. There was a compensation cess also, which the government had introduced. And the whole idea was to compensate the states for any losses that they may incur. We are now aware that, we recently had this GST Council meeting also where the fate of compensation cess was again discussed. The rates, it ranged from 0 to 28 plus cesses, if you see, like typically a high-end luxury car would range anywhere up to 53%. So this is typically how the whole GST has come into being. I'm just taking absolute basics here. Incidence of tax, we know, and why this is critical, because some of these factors is something that we'll be covering more in detail when it comes to a works contract and infrastructure typically. So I'm just trying to, bring it all together at once. Supply of goods or services or both by a taxable person in furtherance to course of business, something that was intended to be brought. Apart from this, there was also deeming ficta, deeming fiction, which actually deemed supply of goods and services, which was also specifically introduced to say, even if these supplies of goods or services or both are not covered specifically by deeming fiction, they would introduce certain services and or certain goods or certain transactions to be covered under the definition of supply. Place of supply was again critical. If it is within India and outside India was typically considered as exports, 0 rating. And within India, again, because of the federal economy, so whether it was intra-state or interstate, so we had CGST and SGST of that state specific, or including UTGST if it's a union territory, or IGST as the case may be. So basically, this was how, we all know that the GST had probably been set up, and we have seen 5 years now, just been 5 years and 4 days, if I may say so, from the introduction of GST. Friends, let me quickly now jump onto the topic of what we are intending to cover here, which is in relation to infra and works contract. We would have read this many number of times, as to what a works contract is and all of that. But I just want to brush it again, because with the advent of GST, which is over 5 years now, there's a lot of discussions would go back to certain judgments which have already been there and been always considered as of very prime importance when it comes to these topics. So works contract, as we know, essentially it would mean a contract of service typically, which would involve supply of goods also while you execute that contract. Now, basically it can be a composite supply of both goods and services, and service element typically considered to be a dominant, being the dominant one in terms of contract between parties. We had this Gannon-Dunkerley judgment where the Apex Court did mention that, when it comes to a contract of service, there is no element of goods in it. And which is why, since it's indivisible contract, you cannot really break it up to say so much of a portion we should consider as VAT. I'm talking in the erstwhile, there's a history that we're talking of, and balance would be something that was liable to services. This judgment actually led the legislation to amend the constitution and insert an article 366(29)(a) clause B, wherein it enabled the state governments to levy VAT as well on the transfer of property and goods. Of course, when we look at works contract, we always say that, you cannot charge 2 different taxes on the same transaction. But here, as you would be aware that we are talking of 2 different aspects, right? One is an aspect of service and other aspect of VAT, and basis that they allowed the deduction of services, and thereafter on the VAT element, the whole idea was to recover sales tax on that. Works contract, as I said, has both elements of services and goods, and it was chargeable to both service tax and VAT by virtue of this amendment, and which gave powers also to charge VAT on the works contract service. Now, this is what we would imagine what would have happened much earlier. Post this, if you compare the definitions of works contract under both service tax as well as under the MVAT Act, I'm aware it's a WIRC, and we would have our friends from Gujarat and Goa as well. But just for comparison's sake, I'm just bringing, if you look at the definition, the whole idea typically under both the laws is somewhere that they're intending to say that there is a transfer of property in goods that would be in one or the other form. And the whole idea is to execute the contract. This is typically the language, what they say. And then they have given the nature of works contract, which would be by way of construction, erection, repairs, or alteration, renovation, etc., as the case may be. And this is true for a movable as well as for an immovable property. Now, this is something that continued to remain until we have seen GST coming into play. So, works contract can be for a movable or an immovable property. You had different, levies and valuation rules coming into play to tax service tax and VAT separately under each state, and service tax centrally as well. So just to understand that, earlier until GST, we had works contract which dealt with both movable as well as immobile properties. We had the valuation rules also which came into play, and then under 66E, we had the works contract which was declared a service as well. Under MVAT, we had, typically a lot of valuation rules which came into play as standard deduction or an actual deduction or a composition scheme, and as the case may be, which were already available on the statute books for a dealer to, choose an option, which is available, the best option that's available, and thereafter go ahead and discharge the liability. So the key or the moot point here would be to understand the definition of the erstwhile regimes. They covered both contracts, mobile as well as mobile, under the ambit of works contract. Now, what happens under GST? Now, if you look under GST, typically when you see there are two different set of definitions that we want to discuss here. One is a composite supply. So here, if you see the definition, it typically says where two or more taxable goods or services or both are supplied, which are naturally bundled, then one of them would be something which is a principal supply. And basis that, you determine whether it is goods or services, and everything else would fall after that, right? In terms of whether the HSN or the SSC code, what is being used is right, what options do you have, what rate do you charge? And in the definition itself, they have given examples of a supply of goods, along with freight that is incurred for an FOR delivery. We also have a definition of works contract. And somewhere it says it sort of borrows the definition under the erstwhile laws, but this time it just restricts itself very much to the immobile property. So if you look at GST now, what would happen is all the contract in terms of, let's say, construction, building, completion, fabrication, everything is now, it is tied down to that immobile property concept. And anything which is movable will not fall within the definition of works contract as far as GST implementation is concerned. To take this further, we have Schedule 2 under GST, where it specifies the activities and transactions which could be treated as supply of services. Very specifically, it says that a works contract service, which is defined under Section 2, subsection 119, would be covered as a supply of services, and that's how it would remain. So this is something that's very much clear, cast in stone as far as works contract and the service is concerned. Now, what is critical to note here is, and this has always been a challenge for us to say that we know that works contract in the GST is speaking of an immobile property, but what is immobile property? And we would have had numerous and absolutely n number of decisions, litigations that would have happened, whether it is eligible, not eligible, because a lot of input tax credits, as you all are aware, would be stitched to this concept of whether it's a mobile or immobile, except a few cases. So immobile property, if you see, what happens is it is not defined under the GST law. It is probably been defined under the General Clauses Act to say that, it shall mean land and benefit that arises out of land and things that is attached to the earth or permanently fastened. Now, Again, attached to the earth is something that again is not defined under the Clauses Act. It's defined under the Transfer of Property Act. And it says it could mean something that is rooted to the earth by way of trees or shrubs, or embedded in the earth by way of a wall or a building, and attached to what is so embedded to the for permanent beneficial enjoyment. So we have something which is embedded, and then there's something attached to that embedded thing, so that it becomes a permanent beneficial enjoyment. Now, as far as when we read these definitions, we feel the certain amount of clarity is there, but you can imagine that there are huge number of case laws around this one concept, even under the excise laws, or even now that we see, and both under excise and VAT as well, that what could be an immobile property, whether it is something which is not movable or immovable, and which is why plethora of judgments have come through high courts and Supreme Courts, and eventually there are certain tests that we could probably use them to determine whether it's an immobile property or not. Now, friends, we'll have to appreciate this fact that determining whether it is immobile or not becomes such a prime importance, because it is basis this one factor that whether it's a works contract or not under GST is determinable, else it probably gets into the bucket of a composite supply. So which is why there's a lot amount of stress here on what could be an immobile property in itself. So what are the various tests that we have seen Supreme Court probably laying down? One is a test of permanency. So it eventually is trying to say that, that it has to be really permanent, and just because you fix it or embed it to the earth doesn't mean it is permanent. So they are clearly mentioning that when it looks to test of permanency means it cannot be merely, for example, in our case, by way of a nut bolt, and you say that it is something that is permanently embedded, and then it should be treated as an immobile property. That is not how the courts have looked at this. Another test which they have used is the annexation test. So a lot of time, and I think this judgment is something we all have studied during our CA days, Sirpur paper mills, where in order to ensure that the machinery is not wobble free or maximum operational efficiency is derived, if we fix it to the earth, we annex it to the earth, it doesn't make it an immobile property in itself. So this is something that has clearly been established by the Supreme Court. And another thing which has often come up is whether this question comes up, if you want to call it an immobile property, while removing that property, does the property on which it is annexed or embedded, does it get damaged? And whether the dismantling it is possible without damaging the property in itself. So we are not trying to establish here that these are the only three tests that we see, because immobile property, again, to establish it, there are quite a few set of tests that may be required as we proceed. And these could be considered as, the three of those tests to test every time to say any contract when we read through to say whether it is immobile property or it is not. And you can imagine huge EPC contracts, huge, if you look at oil industry or if you look at any chemical industry, the amount of plant and machinery, which is then probably affixed or embedded becomes so huge that these questions, often come back to us to haunt, to then determine whether it could be considered as a works contract or a composite supply. So this sort of various test is something that we ought to always use when we look at any specific contract. Typically, key takeaway, what would we say is when we look at this works contract specifically, we would say that it means anything which is towards immobile property are alone considered as works contract in GST. So then what happens to contracts which are in relation to movable property? Does it fall under that composite supply bucket or so? Chances are it would. Now, if you are looking at specific examples, let's say a powder coating transaction, right? Whether it's naturally bundled because there's a transfer of material by way of the chemical or the powder or the color, and then some treatment that might happen. So in such cases, it could be considered as a composite supply. Of course, the question would then arrive as to what is the principal supply there. Is it the service or the coating? And a good amount of questions would follow that to determine if it's a composite supply. Basis that the principal supply, and then thereafter the applicable rate, HSN, SSC code, as the case may be. So this is something that we could look at as a key takeaway when it comes to a works contract under GST. Now, friends, let's get into a bit of valuation and other issues if you look at works contract. Now, typically, when we look at a valuation, we have Section 15 in the GST Act, which determines this. We know that Section 15 lays down a lot of inclusive, aspects when you consider the GST or the valuation part as well. So it says price has to be the sole consideration. It says any other taxes apart from GST has to be considered as a part of, the valuation on which the GST ought to be charged. Incidental expenses are to be added. And we have this one aspect coming out very clearly as well, where expenses are incurred by the recipient on behalf of the supplier. So we have mentioned the Supreme Court ruling here, Bayana Builders. Typically, what had happened, there was a contract which was given. And just for simplicity, let's say the contract was worth for 1 crore of rupees then. And the supplier was supposed to execute the contract, but it so happened that the recipient had actually given material or goods worth rupees, let's say 40 lakhs out of the entire 1 crore. And the question then arises on what is the amount on which the supplier ought to charge service tax. The Supreme Court held that, in such a case, there's no consideration that flew between the recipient to the supplier, because whatever goods was received from the recipient was used by the supplier to again deliver the contract. So in such example, when we took like the contract was for 1 crore of rupees, 40 lakhs of goods was supplied by the recipient. The Supreme Court said then the liability would only arise on that 60 lakhs, which was the amount which was used by the supplier. Now, to overcome that particular judgment, there was amendment in the law, and which also has now come to GST to say that if something ought to be done by the supplier, even if it is done by the recipient, it would be considered as there has been a supply by the recipient to the supplier, and the supplier has in turn supplied it back to the recipient. Now, this is something that we had certain issues even under the VAT regime as well, where in a works contract, typically we have seen that a contractor is responsible for an RCC job, and it so happens that 50 bags or 100 bags or 500 bags of cement is then provided by the contractee to the contractor. And that question also came up to say, what was the original contract for? Did you agree on to exclusions in that contract? And if you remember, under the VAT regime as well, this is something that we constantly used to verify by way of the contracts that we were given to us. And accordingly, we took care of this aspect to say that it was not previously agreed, or if it was previously agreed, then we can ensure that this was a part of the contract value. In terms of the definition, it also goes ahead to say the late fees and delayed fees, if there's anything charged, is also a part. We now know, right? A lot of time we raise invoices on our customers, and if they don't get in time, we would have given a window, a grace period, and thereafter we recover some interest on that. Now that interest typically gets stitched to the rate at which the original goods or services were supplied, and which is why that also becomes a part of my supply as far as the valuation rule goes. Certain points that we think that would require consideration is, first of all, whether the labor cess, typically if you see in the construction industry, because as you would be aware, like we have certain state laws governing such particular cess, wherein it says where the number of contractors, workers on the site, if they go beyond a specific number, then you ought to take registration and ensure that the labor cess is paid. Now, what happens as a contractor is whatever labor cess that I am actually incurring, I recover it from my contractee. And whether such labor cess would become a part of a works contract, because as you would remember, when we saw the definition, we saw that only GST is kept outside the ambit, but all other taxes and duties are considered here. In that background, labor cess, to my mind, would become a part of your value. The goods, it will be considered as a part of your valuation, and GST ought to be discharged on that value. So there are 2-3 factors you could consider here. One is, if I'm a contractor, I would actually recover this amount from you separately. And on that labor cess also, I might recover the GST, which is one way to look at it. Other way to look at it, I would probably still continue to collect the cess from you, but I will not recover GST on it on the invoice. We did see certain invoices in that fashion in the initial phase, but there, because all of the duties are a part of GST, this again adds up to the violation, and to that extent, the differential amount, the liability was required to be discharged. So this is something that we have to be mindful of. Another example, typically when you look at the valuation, is a cross-fault breach clause. Now, I'm sure we all are aware, but I'll just take a minute to walk you all through. What we are trying to say here is, overall, there's always an agreement to a specific contract. That contract could be in relation to execution of, let's say, specific contract of an RCC construction. I'm just giving an example. Or maybe, where I have to do a powder coating on a certain set of material which you have sent, and then I return it back to you. Now, for some reason, I split this contract to say one is for goods and one is for services. And cross-fault breach clause is typically clause which says that if there is a mistake on, let's say, the second agreement, second contract, which is entered, it will have implications of the first as well. So much earlier, because the way we had VAT and service tax, both elements, people used to get into two different contracts where they supplied goods first, and then there was a service element. But the cross-fault breach clause always meant if while installing that machinery, let's say, if there is a mistake on my part or something goes wrong, then the damages would be recovered not only on the service element, but also on the entire contract, which includes goods and services both. Now, in such a case, the case that we are referring here is a cable corporation, where this taxpayer actually typically bifurcated this contract into two parts. One is like a freight, in terms of transportation, and the other was more in laying of pipes for the laying of cables for this particular contractee. And it took a stand to say that, that a freight is liable on reverse charge, hence I'm taking the deduction. And as far as laying of cable is concerned, there was a GST which was charged and discharged. What probably this advanced ruling authority said is that because of this cross-fault breach clause, you cannot consider or artificially split this contract into two. You consider it as one, and basis that they said you cannot then take a position that a freight is something that is liable to be reverse applicable on reverse charge. They said this is as one thing that we'll see, and because of which such freight charges was also included in the valuation, and thereafter the differential liability was ought to be discharged. Now, whether this was further followed up with the AAAR, or whether they'll follow up with the GST tribunal as and when it is formed, is something that we might have to wait and see. But this is something that has come. So cross-fault breach clause plays a very important role when it comes to works contract. The third aspect we have quite often seen is liquidated damages. I think anybody who has been a student of indirect taxes under service tax has probably seen this huge number of times as to way this were treated. The lower authorities is always used to come up with a position to say that liquid damages is liable to service tax, and whereas we have seen quite a few judgments at the CSTAT level to say that that this will not form a part of the service tax and liquidated damages. There's no liability on liquidated damages. But as much as this is true, as much as this is true, we have seen now quite a few number of advanced ruling judgments that have come, which has holding divergent views, and wherein that they are establishing to say that liquidated damages in such case is liable, and they are typically using the umbrella of that tolerance of an act. Of course, all these judgments, and as much as we go deeper, we'll come to know the whole issue of whether it's a breach of a service or breach of a contract, and why was the liquidated damages done? Is it because there was something that was not up to the mark, and so on and so forth. But net, if you think through, we'll probably understand that we would still want to go by the view that liquidated damages for non-performance of a contract typically may not be liable for GST. Of course, time will tell, and we'll have to wait and see how we take this forward and see when it is tested, when it goes through the test of time, and whether this view will continue to remain valid. This was on liquidated damages. Now I'll come back on the construction activity. I'm just now slowly getting a little into different set of works contract typically that we see here. So way back in, we had a CBC circular, where it said that when it comes to construction of complex building or structure where it is not involved only in transfer property goods, but also in immobile property, and higher abatement could be, used, or, in order to arrive at the value and thereafter discharge the service tax liability. Now, in relation to this, if you see what we have under Schedule 2, Entry 5B under GST Act, it says that the construction activity will be considered as supply of services, and it also goes ahead to see if the entire consideration, typically on a constructed unit, is received after the issuance of a completion certificate. It says then it will not be considered as a part of service, and there will not be any GST on that. What we have also seen is we have Schedule 3, which says that these are the activities or transactions which is neither a supply of goods nor supply of services. So this is not supply at all. Even when we read back to Section 7 and the Schedule 3 together. So here they have clearly excluded all the transactions in immobile property from the scope of supply. Now, also, just to take a step further, any under construction flat which has an undivided share of land. Just to give an example, let's say we have a 20, 25, 30-story building, and I'm booking a flat on a specific floor. What it goes to say that when I purchase that unit, there's an undivided share of land which goes with that. So in such a case, we have a provision which says that they'll deem that the land component in that particular complex, or the unit rather, would be considered to be 1/3 of the gross value. To give an example, let's say if the flat is costing me a 6 crore number, I would take 1/3 of a deduction towards land, which is 2 crores, and I'm supposed to discharge the liability on the balance 4 crores. This is what we have, the notifications and the provisions as far as Schedule 2 and Schedule 3, probably indicating, or rather, probably making it clear in the law. Now, in relation to this particular aspect, it will be very interesting to go through, and I'm sure we all have gone through this judgment of Munjal Manish Bhai Bhatt. So what typically happened is here, he had actually purchased a plot of land from the developer, and with the condition that the developer only goes ahead and constructs a building for him. And in such a case, it so happened that the value of the land was always known, and thereafter, the only requirement was to discharge the liability on the construction of that building. But quite naturally, following this particular deeming fiction, the builder or the developer, they considered the whole value, gave a 1/3 land deduction, and thereafter charged the GST on the differential amount. Probably one of its kind under GST, as much as I'm aware, that this gentleman approached the High Court, and he questioned the whole valuation mechanism itself in first place, to say that why is a deeming fiction coming into play when the actual value is something that is very clearly identifiable or very clearly known to us. Now, in that background, we have this judgment which says that the deeming fiction providing a mandatory deduction, which is restricted to 1/3 of the value, is ultra virus, and it won't be accepted, because you clearly know the value of land. So don't go into deeming fiction. Deeming fiction will come into play only if the value is not known. Now, this is a judgment which probably a lot of people have welcomed, because if you typically look at any location, let's say if I look at Mumbai or any other big city, let's say Pune, or even for that matter, maybe Ahmedabad, or we really don't know what could be the value of land that place as far as undivided share is concerned. And people did welcome this judgment to say that means in cases where the land value is supposedly much, much higher than 1/3, whether they can go ahead and take the deduction, and thereafter, what do you call it, only charge GST on the differential amount. As much as this judgment is a Gujarat High Court judgment, obviously we'll welcome it. But what needs to be known is we very recently had the Supreme Court in case of Mohit Minerals, when it had come to them, which is a 3-member judgment, when it had come to them to decide on whether the ocean freight is liable to IGST or not. The reason being, whenever there's a CIF contract value, there was a deeming fiction under the law to say that 10% of the CIF will be considered as freight, and on that freight, you were required to discharge GST on the reverse charge mechanism. Now, the Supreme Court in Mohit Minerals, very recent judgment again, it held that that as far as any valuation, prescribing any valuation is concerned, by for notification is concerned, it held that it is very much within its powers to do that. And if I compare that judgment with the present Gujarat High Court judgment, if you see, probably chances are that Gujarat High Court judgment might be again put up for review or taken before the Supreme Court again. And in the view of this Mohit Mittal judgment, it might probably, to my mind, I believe that they might again reverse this particular judgment to say that that's not possible. Because if you look at the fact pattern, typically, though we had a different reason more or less, but at least as far as this one aspect, when it comes to whether by way of a notification, I can deem to place in the law a valuation mechanism or a deduction per se, the Mohit Mineral Supreme Court judgment will come into place. What my personal thought is, and basis that I believe the Gujarat High Court judgment might get questioned by the department in the apex court. So this is one thing that we ought to be aware of when it comes to construction contracts typically. Also, there was one other ambiguity on whether the developed plot of land itself, whether it will be again liable to GST, because essentially what we are trying to say is the plot remains still a piece of land, and what we are only doing is we are developing it, we are leveling it, and we are drawing some drainage lines, we are putting some barbed wires for clear demarcation. Now, whether that in itself changes the color of that piece of land. Thankfully, in this 47th GST Council meeting, as far as the recommendations are concerned, the council has said that the developed plot of land will not attract GST. And this recommendation is, if you see, it's the verbatim what we have reproduced here. It says sale of land after leveling, laying, and down of drainage lines, etc., is a sale of land and does not attract GST. So we did see certain issues here in certain pockets to say that they were trying to tax this particular activity as well. But thankfully, this particular clarity that, believing that this will get approved, will do a lot of wonders for unnecessary complications that might have arisen because of this. So this is something that is again a critical aspect as far as the construction activity is concerned. As far as the status of partially constructed unit is concerned, though this is something that might not have come up, but this is something I felt that we should bring to the attention of my fellow colleagues to say, construction activity, if you see, the issues have been there since a very long time. Now, if you look at one Supreme Court judgment of L&T, if you see, just to give an example, let's say I'm a developer who has undertaken a construction of a 15-story building, and I have started construction, and up to 5 stories of the flat unit or the building that I actually construct, I don't enter into any contract to sell any of the units. Now, in such a scenario, if you look at this judgment, what happens is that it says an activity of construction would be a works contract only at the stage when I'm entering into contract with a potential customer. Sorry, but until that moment, I'll be constructing the property for my own self. Now, what happens here is that if you look at any building construction nowadays, let's say the construction is almost about to get finished, but the completion certificate is not there. There's 1 or 2 floors yet pending. And if I walk into that builder's office to buy a unit, what happens is on the entire value of that flat, he would give me a 1/3 land deduction, and he's asking me to pay the GST on the entire amount after a 1/3 deduction at 18%. Now, this is where this particular judgment might find a place to say that if I have to literally interpret this judgment, and I believe this judgment has not lost its relevance even under GST, what would happen is that until that moment that I've entered into a contract, it might so happen that he was always constructing for his own self, and it was never into works contract service. So to that extent, he the builder may not have probably any reason to discharge the GST liability. But as much as we have said this, and rather, if you also see the whole issue under the VAT regime, especially in the MVAT regime also, that we remember that from 2006 onwards, all those 6 to 10, all those building construction activities that had come up, we had a huge, litigation going into that. And finally, there was a rule 58(1)B which got introduced, to say that if you are entering the contract up to a commencement stage, a plinth stage, an RCC stage, what would happen? 10, 5, 10, 15%, 45% of deduction. So at every phase, such a deduction as such provision was made under the MVAT regime. But under GST regime, we don't have any such valuation to play. So there might be a possibility that somebody tomorrow might take a position and say that because I didn't enter into a contract with my customer until that stage, I was always constructing for my own self. Hence, there's no onus on me to discharge the liability up to that minute or that moment. Now, how do you determine what is the document to place your reliance on, or what backup documents you need, what should I amend the construction words? All of that is something that would come into play. I'm not denying litigation definitely will come into play. So, but this could be a thought that I want to leave you all with, to say that this is something that's possible. But as much as this is true, which means up to that level, if I was always constructing for my own self, the flip side of that is that means whatever goods and services that are procured for construction was always for my own self. And my provisions of section 17(5) C and D might come into play as far as input tax credit eligibility is concerned. So obviously it's a double-edged sword, and we might have to wait and see if, because of on account of this one judgment, there are certain issues that may come in play later. As I said, yes, the above position has not been considered GST, and does above still hold good? Maybe, maybe not. But only time will tell, and we might have to probably be a little patient on that one front. Now let me come on the your EPC contracts for solar. Typically, if you see, GST was introduced in July, and then we had rates which were prescribed. We had 5% on goods for solar projects, and we had 18% on services. We had various rulings that we have come into play where it says no, it's a works contract, and we would charge 18% on such nature of contract. Of course, we have certain AAARs which is confirming this particular view. We have Giriraj Renewables, Maharashtra, and also Solaris non-conventional energy. Now, what happens from 1st January 19? We have a provision again, dimming fiction, which says that we will assume when you are executing a contract, a solar power project, we would assume that 70% of that would be towards goods and 30% of that would be towards services. So if you see a typical contract where 5% on PV modules, etc., would be charged, and we have 18% installation, the effective rate effectively essentially comes down to 8.9%. And that is the rate that we would typically charge on any contracts post 1st Jan 19. Obviously, there's a circular which claimed that the artificial split of the 70 and 30 would be available since the inception. And also it covered a case to say, supposing somebody has already discharged at a higher value than this, then there's no scope for claiming any refund. So this is something that shut the door when it comes to the dimming fiction and the implications on already executed projects prior to this explanation that was introduced. Later on, effect from 1st October 21, there was an increase in tax rates also. So this 5% on goods, they had increased to 12%. And this was essentially, if you see, typically in such contracts, inverted duty structure refund is something that would definitely come into play. And that is something that we have covered a little bit at length in the ensuing slides. So this was the effective rate, especially when it comes to the solar project. Now, certain points that needs consideration, if you look at it, is when it comes to goods portion on devices, we see in any solar power project contract, you would imagine that 90% of these contracts are always the value of goods, and you typically have a 10 to 12, or let's say at max 15% on account of the service portion. And what happens here is, because of this artificial split now, your lot of GST is getting accumulated, and thereafter there's an inverted duty structure that comes into play. Now, one point that we need to bring it here on the table for discussion is, when it comes to composite supply under GST, is there a possibility that the government can segregate such transactions to supply of goods and services? So let's say it's a movable, project. We have a principal supply of the solar power itself, generating systems, and then we have a naturally bundled service element which is getting attached to that. So if they get into this particular artificial split into this, whether this will be permitted or not is a question. And you would imagine we are again going back to few judgments like Mohit Mindals and also Suresh Kumar Bansal, where it says when the notification is not giving clarity on the valuation aspect, then there should not be levy at all. But again, this is something that might get addressed again under Mohit Minerals to say whether the government would have an authority to specify any specific valuation, in terms of splitting the goods and services. And we have seen this to say that the Supreme Court did mention that, that's very much possible. And such an artificial split is permitted. We hope and see that we don't have too many litigations or complications around this as we proceed. Another aspect here, if you look at it, typical composite supply, if you have to look at it, we know we are talking of composite supply means there are two or more taxable supplies. It could be goods or services, or it could be both. Another aspect of a composite supply, it should be naturally bundled, and one of them should be a principal supply. This is how it is defined. Principal supply is also defined to say there's a predominant element in that. One of them is a predominant element. Now, if you look at the solar project, we would always imagine the goods, the solar modules, the PV modules, and all those are something that will always probably held the predominant element of composite supply, and others would be ancillary in terms of the services and all that comes into play. So the question again arises, where certain contracts where even if there's a predominant element of goods of supply of goods, and if they result in immobile property, how does one look at it? Because then whether such contracts will be considered as composite or works contract is something that will always come. And because this probably question could be agnostic to the sectors, we have seen this huge solar power projects where you really can't, probably very difficult to determine whether it's a movable or it is clearly immobile or not. And these questions will again come into play, whether you are getting to composite supply element or you're getting into a works contract element. As I said that the government by way of notification is clearly indicating somewhere to say that this appears more or less to be like a composite supply where the value of goods and services are clearly determined. But this AARs that we have seen, or AAARs that we have seen, they are considering them to be works contract. And we can imagine goes without saying, because this is something that, we have a better rate coming. The effective rate is much better when it comes to works contract as against the split between 70-30 as far as solar projects are concerned. Now coming on to another aspect, typically we see EPC contracts when it comes to construction of roads. We now are aware, there's a lot of, as we said, there's a good amount of focus, as I said, on infrastructure, and we are getting news day in and day out about so and so national highway been built, and we have very recently made a Guinness record where we probably constructed, I believe, close to 100 odd kilometers in less than 5 days or something. 106 odd hours is something that I recollect. So what's happening is there's a huge amount of focus, as I said, on infrastructure. But as much as that is true, what's happening is as far as the deductions or the benefits or the exemption that we have read through multiple circulars and the notifications is concerned, there's a good amount of ambiguity around it. Now, typically under a construction of road, which is probably, the awarded by the NHAI, we have the concessionaire coming into play, we have the EPC contractors coming into play. So what is the model that we have seen earlier and what is it now? So typically it was earlier like a EPC model where, used to build and transfer the property in those goods. Then came where, it was a built, operate and transfer. And then now it's a hybrid model where it called the HAM model, which is like a hybrid annuity model, which is now typically, we see a lot of contracts when being entered into this particular fashion. Now, the whole confusion, if you see here, on one hand, we had a particular entry which said that whatever was collected by way of toll revenue on account of access to the road, that is exempt under entry 23 of this particular notification. And the next element was on the annuity part, where it was not exempted previously, but because there was a new 23A entry which was entered, and where it said that services by of access to roads or bridge on payment of annuity is also exempt. And we had this circular also, circular 150, which said that that led to a little bit of more confusion to say that it is applicable only in case of services covered under 9967, which is supporting services in transport, and not 9954. Now, I'll just take a minute here to probably just walk you all through about what all we have seen here. See, what happens here is whenever a contract is awarded by NHAI to the concessionaire, essentially what is the responsibility here is, there's a construction of roads. Then there is one element which is typically called as, where there's an upfront payment, maybe in a year or a period of 18 months or 24 months. Then he is permitted to collect tolls, let's say for the period of 10, 15 years, as the case may be. And finally, there's an operation and maintenance contract, which is a third element altogether. Now, what are these particular entries, both 23 and 23A, indicating in that notification is that whatever services or the services which are typically in the nature of supporting services in transport, which falls under SSC code 9967, is something that they intend to exempt. Now, the whole issue is the construction of road will always fall under 9954. And the moment it falls under 9954, what happens is that being a construction of road contract, it is charged at 12%. Now, this circular and also the notification that we're seeing earlier are somewhere trying to, I say, confuse a bit to say that whatever amount that are collecting by way of toll or annuity, they are trying to say it is exempt, subject to that the services fall under SAC 9967, and it is for the access to the road and all that. Now, the whole complication here arises because if I am the concessionaire who has to construct the road and I'm going to get a combination of a fixed amount or an annuity amount or a toll revenue, which I'm eligible to collect for X number of years, I'm still, or the underlying service that I've always provided is that of construction of road only. I don't enter into shoes of the owner per se, let's say NHAI here or the government here, to now allow people to access the road. I personally believe that I never enter into that shoes, which is why, to my mind, when it comes to annuity, or even for that matter, when it comes to the one-time payout or even toll revenue for that matter, if it is for the consideration is for the underlying service of construction of roads, my personal view is that would mean it will always continue to be taxable at 12% and will not be exempt. Now, industry, what we have seen people have done is they have taken the benefit of this particular notification and the circular, and they have went ahead to claim that to be an exempt supply. Now, the moment you call it an exempt supply, automatically the input tax credit, which was there with them, is subject to reversal. And now, if this issue comes up later by way of a departmental audit or some other inquiries, problem is that they would still end up probably discharging the liability on GST, but the credit eligibility is something that will get questioned. So this is something that we have to be a little careful here. And so this was typical contracts, what we've seen so far. Now, under the new contract, where it comes to, HAM model, which I said, which is like there's an hybrid annuity model. It's a combination of 2-3 things. This is something that we discussed in the initial phase to say that government is now looking at a public-private partnership wherein they are trying to support or finance the concessionaire to be able to build the roads, because the whole challenge is about which banks will give and then how many of them players will come into play and all of that. So if I say typically a contract is for a 500 crore contract, if that's a 60% upfront support from the government, it says that to the extent of that 300 crores, let's say, I get either a payment in 2 years or as the case may be. And accordingly, that amount becomes chargeable to 12% because the construction of road. Now, the balance 40% is something I would get an annuity over a period of, let's say, 10 years. Here, in such cases, what happens is the government retains the control and the power to collect the toll. And in that scenario, that collection of toll could get exempt under this particular sub-entry. But as far as this annuity payouts is concerned for the period of 12 months, I believe, and my personal view here is that this could be, again, taxed to 12%, and claiming an exemption here could be lethal, if I may say that, but could be challenging for sure, to say the least. So this is another thing that I thought I should bring on the table as far as construction, contracts are concerned. Moving ahead, I'll come to the input tax credit part. So we are all aware this is typically how the section is comes into play. Section 16. It is available only to a registered person. It should be used in furtherance to course of business, and I should also fulfill all the conditions mentioned in section 15. Here, if you look at the term business, it is given a wide and inclusive meaning, and which might probably end up say that all activities could be incidental and ancillary to business would would be covered in this ambit. Other conditions, if you look at it, we have seen this, that we should be in possession of a tax invoice. We should have received the goods or services. Then I should be making the payment to my vendor. I'm assuming it to be a domestic procurement, to be payment within a period of 180 days. He should have discharged that to the government treasury, and he should have filed the returns, and so on and so forth. Especially when it comes to capital goods, we have seen the condition to say that that I would not be allowed to claim a depreciation on the GST element if I intend to claim the input tax credit on those capital goods. So this is the typical set of conditions that we have seen when we're reading section 16, 17, 18, as the case may be. Now, certain points now we are seeing typical related to this industry is the retention money. So a lot of times this question comes into play that whenever I receive any services from a vendor, there's a retention that I hold back and I don't pay to him immediately. It might take a year or a couple of years. So here again, the question of whether I'll be eligible to claim the input tax credit or not comes into play. And what we are trying to bring on the table here is, if you look at the section, typically it says fails to pay within a period of 180 days. We have highlighted this portion for you. And when we look at the judgments, even if it looks at Malaysian Airline or even Subaraya, if you see, what they're trying to indicate here clearly is when it comes to fails to pay, it has to be read to say that fails to pay when it is due. Now, what I mean to say by that is, in the contract, if we have agreed in advance to say that whatever services that you would provide, I would be discharging you, or I would be, paying out the differential amount. However, for the performance contract or for quality aspects, if I'm holding back 10% and it is due only after the end of the contract or 15 months, whichever is earlier, later, whatever way you look at it, that becomes very critical here. And that to me is something that I would say, it is then that I would say that there's, one has failed to pay it and not prior to that. So this is something that we have to be, mindful of. And we could definitely use these judgments to probably safeguard our client's interest, or provide them additional questioning to say that because it was not due, I have not paid it. That itself doesn't mean that I would not be eligible to claim the input tax credit to the extent of that amount which was retained. Let's say 10% in our case. So, there we have to look at it separately. I would always say that I have paid him the GST and the other amounts. This contractually I was not due to pay, and hence I've held it. And I believe we have a strong case when it comes to retention money aspect specifically. And we have this rulings also, Hindustan Zinc, which was again affirmed by Rajasthan High Court. And here also Rule 4.7 that we speculate see as far as service tax was concerned, it also sort of ensured, or rather confirmed this particular view that on retention, at least we don't have any specific challenge per se. Block credit, when we look at section 17.5, and these are two specific clauses that come into play, 17.5C. So it says that where a works contract service is supplied for construction of mobile property other than plant and machinery, except when it is an input to services for furtherance of course of works contract service, then it is not eligible. So these are some condition which says that you will not be eligible to claim under these criteria. We have clause D, which says goods or services or both received by a taxable person for construction of mobile property other than plant and machinery is again not allowed. And we have further explanation to say what is a plant and machinery and what is excluded and what is included. So this is the legislation. We are aware of this. So if you look at specific issues here, so if you look at this, credit is not eligible when we have a works contract service for, obviously, if I am also providing a works contract service, I'm eligible. But otherwise, it says the recipient will not be eligible unless it's a plant and machinery. Similarly goes with D. Now, what happens is, what is the view when it comes to plant and machinery? And if it is resulting in immovable property, whether the credit is eligible or not, I believe the credit is eligible, because the law is very clear out there to say even if it's a plant and machinery, obviously, all those construction activity which is concerned in relation to plant and machinery, and even if it is immovable property, the input tax credit is definitely eligible. Of course, what is plant and machinery? We have the explanation which sort of says that it is an equipment or a plant or a machinery, and all of that we could consider. But I'll just allow me to go back one more slide. But if you look at here, the meaning or the definition of plant and machinery, it says apparatus, equipments, machinery fixed to earth, foundation, and that are used for making outward supply of goods or services. Now, this is something, and it includes foundational structural support. Now, this is something that might be open for litigation, because if I have to give an example of a weighbridge, one school of thought would say a weighbridge that is required in my plant, is it, or required in my factory, is it a machinery in itself? And is it used for supply, or used to provide output supply or not, is something that probably we might see somebody questioning this. But we do have judgments under the erstwhile law as well to say, when we speak of, making manufacturing, or let's say for that matter, or making output supply, whether it is directly or indirectly something, we need to check and verify, and we can probably take a call accordingly. Again, this question is, what is the meaning and scope of plant and machinery? Only those things which will fall under 84 and 85 can it be said, because if you look at the income tax provisions, the term plant and machinery has been given a very liberal interpretation. And even for civil structures, they have not specifically mentioned. They have just used the principles of justum generis. And they have said anything like building could be a structure when it comes to civil structure. What becomes all the more critical is, if you look at the explanation of plant and machinery, here you would imagine that they have probably spoken about foundation support. They have spoken about structural support. So this is something that, we could always see that if something is a foundation support, even if it looks primarily as a civil work or a foundation work, if it is for a plant and machinery, it would still probably tick all the boxes as far as claiming the credit is concerned. Goes without saying that, all the relevant documents and proofs should be kept on record so as to substantiate that claim at a later point in time. Another key judgment here is the Safari Retreat is an Orissa High Court judgment. Now, typically what had happened is that, they had to construct this immovable property and let out. It was a case of, they constructed this immovable property and let out this property. So whatever input, whatever goods and services were procured for construction of that, they went ahead to claim the input tax credit of GST on that. And the High Court probably say that, you really cannot have a very narrow interpretation. It will probably, it says it is will frustrate the basic object of the act. And as much as the petitioner has to pay a huge amount, because the input tax credit is not there. So it is on these grounds that they have probably said that the Safari Retreat, that the input tax credit, even if the property is let out, would be allowed, is what the Orissa High Court judgment said. But personally, if you ask me, I think my personal view would be this could be challenged. And if you see, a lot of appeals have been preferred against this before the Supreme Court. An appeal has been preferred against this judgment before the Supreme Court by the authorities. And my little understanding and being a student of law, I believe that this, I think, can be a challenge and at a later point in time. Basically, basis the provision that is in place, and nothing in terms of whether it's going to come as a cost to the taxpayer or not. That's not the point that we're looking at. Basis this, we have notices have been issued by various high courts also on the aforesaid issue. We have referred to some here. just for a quick understanding. I'll move on to place of supply. Again, when it comes to immobile property, a place of supply, typically if it says that where both the supplier and the recipient are located are in India, it says anything which is directly in relation to immobile property. Wherever that immobile property is there, it is basis that the place of supply would be determined. And obviously, the word definite directly is of utmost importance, so a lot of time, this question comes to say, what type of services when it comes to immobile property? Does it mean all services? For example, an architect fee could still fall within this ambit and would be liable. But if there is another consultant who had been appointed to identify which city in a state, for example, whether that services could be said to be directly related to the immobile property can be questioned. So this is something, what services would probably be triggered by this particular provision as far as the place of supply determination is concerned needs to be checked. Another scenario we took where the immobile property is located outside India, but both the suppliers as well as the recipient are in India. So we have another provision to say, in case if the property is situated or the vessel is situated outside India, wherever is the location of the recipient will be determine the place of supply. So here also you can imagine that the government has probably ring-fenced all aspects or ring-fenced all sides to say that, that input tax credit or the liability or the GST collection remains in India. And we have very clear provisions here basis the place of supply. This is the scenario 2 that we have looked at. And the third scenario is where, let's say, either the recipient or the supplier is outside India, and then the location of the property could be in India or outside India as well. Then the place of supply would be where the property is located. So a lot of times you might see that you have a contract from somebody in Singapore, and in relation to property in let's say a UAE or any other place, anything in relation to that, it says the place of supply would be basis where the property is located. It could be a reverse case as well. The property is located in India and we have a recipient outside India, then it becomes a domestic transaction liable for GST. So in this background, if you see, we just try to cover one aspect, and this is something that might have come, this question might have come to you numerous times to say, we have taken up a case here, let's say A is an EPC contractor in Maharashtra, and there's a recipient of services, like it's located in Madhya Pradesh. The site where the intended construction is also in MP. The PO, the purchase order is raised by B to A, and the goods would be supplied from Maharashtra to the site or from any other location to the site. A's engineers would be working on the erection commissioning also on the site. Now, the question is whether A is required to take a registration, GST registration in MP. So I'm sure this question would have come multiple times. And what typically happens are, the way I would want to look at the law is the place of supply provisions, where it says, wherever the immobile property is located, let's say in MP in this case, would be the place where, that's a place of supply. But what needs to be understood is, if you look at the registration provisions under GST, it says from a place where there is a supply of goods or services taking place from that location. That is a critical point. If you go through the definition of taxable person and place, place of business and all that, we'll get into this aspects of, fixed establishment, or where there's a permanence of human capital and from where you can effectively supply goods or services supply. All of that comes into play. Goods is far more a simpler aspect to determine rather than services, if you see. So if you look at this particular case, I would like to look at it like this to say that the place of supply will always remain to be MP. But because my engineers are going there for a 12 months, 18 months, or 5 months, or 3 months, I may not want to say that there's a fixed or permanent establishment based out there because they are staying there for these many months or almost like a year, year and a half, or even 2 years for that matter. And they're staying there, which is why I might have to take a registration MP. I would want to look at it that in either case, when I build to that particular, let's say, recipient of service B in our case, I would always charge IGST, which with the code of MP state, and thereby the credit would be eligible to the state of MP, or the tax would come into MP, is how I would want to look at it. We have AAR in this case, which is T&D Electricals, which is Bangalore authority, which on similar lines. So in that case, what had happened? There was a service supplier of services, service provider rather from Rajasthan. The contract was to be executed in Bangalore. and it says that it need not take the registration in Bangalore, because for all goods which are procured from Rajasthan, it would be an IGST. For all goods which are procured in Karnataka also, it says it will be a bill to ship to matter. So even that would be an IGST. Is something that the AAR has probably sort of ruled or held. Practically, what we have seen is that because it is in certain services could be in relation to an immovable property, the place of supply would remain to be that state. So we have seen that a lot of taxpayers have taken the registration there only so as to be eligible to claim the input tax credit for all those typical small scale goods or services that they're procuring locally out there, and not let it to be a cost. But that being a practical aspect, when you looked at the legal point of view, I believe here in such case, a registration may not be required, and we have a AAR which is favoring this particular view, and which I thought would be quite important for us to know. Certain other miscellaneous issues I would like to cover. Sorry about that. So a few aspects of something that would I just want to bring it to your attention, and few would be something that we are all aware. So when we look at a construction or a works contract services, it would definitely fall in the definition of continuous supply of services. Why I'm probably just bringing it to the attention is because all those aspects, when it comes to the point of taxation, the time of supply, will have to be looked at from a continuous supply standpoint. And your raising of invoices, everything then gets stitched to that. That is something that we ought to be mindful. So this is something that I thought I should bring on the table. Practically also, we have seen that a lot of times, we know the way the law is worded. It says anything that is immovable. And I'm giving an example where it is not a plant and machinery. So anything which is immovable, we say there's no eligibility of input tax credit. But when it comes to movable goods, the input tax credit is allowed when it comes to renovation or modifications or even setting up for that matter. So we have seen practically that a lot of time taxpayers are trying to, vivisect, or rather vivisect, I would say, they're trying to enter two separate contracts. One clearly where it is for supply of mobile goods, and one more or less in relation to mobile goods. So to give an example, there could be like soft furnishings like blinds, or there will be like a partition which can easily be removed by a nut bolt. So this is something, chairs and furniture, this is something that they are trying to execute a separate contract clearly. And there they are trying to claim the input tax credit. And then on the immobile part, there are a lot of gray areas typically. Let's say HVAC, if you look at it, or the electrical wiring. So if you look at this LED, ceiling lamps we have for a lot of our offices, we would see that, they would say that we can always dismantle them without destroying the property. Now, as you remember, one of the tests of immobile property was whether it can be dismantled without this. So we have seen such particular contracts being entered into, and where they are trying to maximize or optimize, if I may say, the input tax credit eligibility out there. Of course, this has to be taken with a pinch of salt, with a lot of caution. The reason being because, once you claim the input tax credit, as you are aware, we can't claim the depreciation on that part. And that's where you have that, proper balance to be kept to say that, will it be fine if I capitalize the GST element and go ahead and claim depreciation for the next few years, where I'll any which way be able to probably salvage that value, as against a case where I'm not capitalizing it, I'm putting it in my current assets. And then when I go back to claiming input tax credit or refund, as a case maybe, this gets questioned. So this is something that we have to be mindful of. Another aspect also, which I wanted to bring it here is, if you remember under service tax, what happens is the title in the immobile property is always kept outside the purview. So what I mean to say by that is, when we say land or any assignment rights in the land, this is something that was always a purview of service tax. While under GST, if you look at it, is only the GST element or the land, the sale of land, which has been kept outside the purview. Now, this leads to certain anomalies. Now, I just have taken a case here. So let's say, for example, A Limited is a leaseholder of a plant which was given to them by any industrial corporation. It could be GIDC or MIDC, as a case maybe. And let's say it was for 30 years. So what happens is, when we take the lease on land, the way the notification exemption notification is worded, that if it is taken by the end user, then it is exempt. and thereby no GST charge. There's no cost involved in that. It was taken for a period of 30 years, but later it so happened that after 10 years, I want to assign that property to B Limited, wherein I move out and he continues to remain the lessee for the next 20 years. Now, what happens here in this scenario is that because I'm moving out, obviously there could be some transaction between the Industrial Development Corporation and A Limited on account of me moving out in advance, and there'll be penal clauses and all that. But what happens between A Limited and B Limited is whatever amount that I receive from B Limited, that amount I will have to charge GST because I'm assigning the the rights in that land. You could have multiple examples. Let's say I would have taken a 10-acre land and I'm only using 5 acres of land, and I want to give away 2 acres of land, or I'm giving the entire property. It could be on any count. Now, what happens in that scenario is A Limited will eventually end up charging GST to B Limited, but B Limited, whether the input tax credit or to B Limited would be eligible or not, the question remains, because what happens is for B Limited, it is eventually an immobile property. And if you look at the provision, the way it is worded, his input tax credit could be questioned, and that could eventually end up being a cost. Now, that's the anomaly which we wanted to bring in. The anomaly, of course, is on account of a provision, a specific provision which you have in place. But when we compare that to the erstwhile provision, and you would know under service tax also it was not there, and even in VAT, because it was immobile property, is always outside the purview of VAT. Stamp duty and all that will anyway come in play, then it will come in play now. So because of this one specific aspect, it might look and it appears that this could end up being a cost. Now, whether that is not an immobile property, whether it is then, in furtherance of course of business, something that one will have to interpret and see whether we can create something out there. But this could remain a challenge, is something that I believe. The last is, I'm sure we all are aware of this concept under customs of a mover, which is called as manufacturing and other operations in warehousing regulation. This was introduced in October 19. It was at the similar time when we had this 15% reduced rate under income tax also, which they have got. The whole idea was then to bring up the domestic players in the market, because everything, the benefit was always lopsided towards somebody who is coming and investing from a place outside India, and nothing new to the domestic place. And that's when this particular mover had come into play. Now, what this typically scheme says is, I'll just take a couple of minutes to explain. It says, if you are actually, wherever is your place of business, your factory unit, that factory unit, you could apply to the jurisdictional customs office and convert that to be a bonded warehouse, right? And once you have done that, it says that, you can import any machinery and import that machinery into this factory unit without paying any IGST on that, and without paying any customs also on that. What it does, so both customs and IGST becomes exempted on day one when you're importing. Let's say after a period of 8, 10, 12, 15 years, you remove this capital goods outside the factory limits. It is at that point in time that you have to discharge both customs as well as IGST on that, or GST on that, IGST on that. This is how the provision stands. Now, what is the value proposition that we are getting here is that if I want to see typically as an EPC contract for various solar or various other sectors, typically, there will be huge amount of machinery that could be imported. What essentially happens is the EPC contractor would import that machinery, and post-importing, it will end up being both basic custom duty and IGST. And on that basic custom duty, which becomes a cost to the EPC contractor, there could be a possible markup, which I'll recover from my contractor here. What we are trying to contemplate is, can you look at a scenario where, obviously, we'll have to ensure that we cover from all angles to say that when I'm importing this machinery, I place a purchase order on the foreign vendor, I import this machinery, and on high seas, I transfer the document of title to this contractor who's awarded me the solar project or any other project as the case may be. Now, if he has already taken the permission or he has already applied for mover and has got an approval, he could get in this machinery without any basic custom duty and without any IGST. Now, obviously, this markup is something that comes as a savings. You can also imagine that now for the next 10 years, 12, 15 years, this BCD element also, if the value, the way the mover provision stands, the value will always remain to be the original value as on date, but the rate would be as and when you remove the goods after 15 years. Assuming nothing changes, the rate is the same that we had today. The value is also the same. Even if you look at the net present value saving, just to give an example, let's say 500 crore worth of machinery is being imported and the rate of custom duty is 10%. I'm just taking it for simplicity. And we know 50 crores was on account of basic custom duty. Now that 50 crores, if I'm paying after 15 years, the net present value of that 50 crores is 1.7 that we look on the table. Second is obviously this markup that comes into play. Third is the interest cost. So when we look at all those aspects, we are just trying to bring on table whether there's any possible way of restructuring the transactions in a way that they can take this benefit along with these EPC contracts, because the contracts are huge, the value of import are huge, and this is where I believe we can look at some possible potential saving, and very much within the four corners of the law. And this mover scheme has been, as I said, has come on the statute since October 9. It was there already earlier, but it has completely gone under an overhaul and have come up pretty much very well, and a lot of industry players are taking benefit of this. I would just cover in the last 2-3 minutes more on the tinkering that the tax rates have happened. So we would have followed up very much in detail. If you look at the GST Council, in order to avoid the inverted duty structure, typically the rate that they're proposing is, if you look at the works contract for roads, bridges, railways, metros, etc., they are proposing an 18% and 6% jump from the present rate of 12. Similarly, in relation to contract services supplied to central and state governments, local authorities for canals, dams, pipelines, etc., it is again proposed at 18%. And to other works contract which is supplied to central and state government, which is in relation to predominantly in relation to earth work and subcontracting thereof, that has gone from 5 to 12. So this is what they have done is so that when it eventually comes to these rates, the inverted duty structure issue is probably addressed to a very great extent, and thereby those many number of claims being reduced at the government's end. So this is something that I thought I can also bring it to your attention. I think that's about it from my side, friends. I don't know, Gautam, do you want to take up questions now, or how do we take this forward?
Hello, नीरज सर.
Yeah, hi.
हाय सर. सर 3 क्वेश्चन है सर, सामने आपको चैट में यहाँ पे क्वेश्चन में दिखेगा सर, आपको 3 क्वेश्चन.
So the first question is, please explain Silicon Supreme Court decision in context of GST, whether dismantling activity would qualify as works contract. So that's question number 1. So if you really look at, I'll be honest in admitting, friend, that I have not probably gone through the Silicon Supreme Court judgment, but I'll be happy to address this. I'll have your contact details from the WSN. I'll be happy to address this, but I'll just put across my thoughts on dismantling per se. So when we are looking at a dismantling per se, and if it is pure contract of dismantling activity, if you are looking, to my mind, it may not probably qualify as a works contract. Because I think it is essentially a contract of service only, where you are actually dismantling the whole machinery and you're taking it forward. As I said, apologies because I've not gone through this judgment myself. Allow me a little while and I could come back to you on this. I'm just going to all 3 are from my friend Nitesh, so I can take one by one. A customer would supply certain permanent material to the contractor for execution of works contract. Whether the contractor has to include value of free issued goods in his invoice. If yes, the restrictions will be high. Please explain an example how manual computing. So I think, Hitesh, the whole issue here is around how is your contract worded. Now, if you even look at the section 15, the way they have said is that all those services which was required to be incurred by the supplier and which is now incurred by the recipient will get added. Now, in the contract, if you are clearly demarcating this in the beginning to say these are certain things which will be supplied free of cost, and if that contract is clearly demarcated in that sense, we have a very good chance here to fight this case out to say that this was never agreed to be done by the supplier in first place. and it is the recipient of services, it was his responsibility to provide those tools or goods as the case may be. In that sense, in that background, I believe we have a good case to fight that may not be a part of my value. Now, having said that, we know Rule 27 is coming to play, where it says any supplies, even if it is in kind, that ought to be valued, and there's a valuation rule that might come into play. But again, the whole issue is, was there any underlying service in first place? Now, we might have to really go deeper in this to say, what is the nature of the goods that you're providing? Is it something that is on account of any equipments or tools, or is it on account of any goods that are getting consumed again or by way of a service? Something that we need to see. Happy to connect with you, Hitesh, and we can probably discuss this further. I don't know if my example has probably met your expectation. I'll just go to the third question now. In case of issues related to input tax credit on retention money, can one structure the payment as per which the customer will pay the retention amount with the condition that the contractor will immediately refund the same to the customer as a performance obligation deposit? Well, you could look at this, but it could definitely address that issue as of this point in time. But when this deposit comes into place, we have certain provisions for consideration. When it comes to deposit that we would have received, what do you call, so deposit which we have received, and as and when it gets adjusted against the consideration, is at that point in time that gets adjusted. But Hitesh, my only point here is, we are looking at only at one angle, one law in hand, which is GST. And you would imagine there are a lot of other laws like the Companies Act or the Income Tax Act and all of that coming, the LLP, all of that coming into play, because then permissibility of considering this as deposits or not might come into play. Primarily, if the way I look at it, I think doable. I mean, from a GST standpoint alone, I don't see that typical as a challenge. And the last is, what is the proposed tax rate in respect of works contract being executed in oil and gas sector at offshore? Well, a very peculiar case, Hitesh. You will have to allow me time to go back to this and come back to you on this. Apologies for not having a clear answer on this. As mentioned, assignment of leasehold rights relating to land, the recipient may not be entitled to ITC, but blockage of ITC under this immovable property is for construction of immovable property alone. Can it be contended that the fees paid is for leasehold rights and not for construction? So, this particular view could be taken, as you're saying, but what we're only trying to put here across is, see, you could imagine when until now, if there's a construction activity coming into play, if I've taken a piece of land on lease, it was never liable for GST. Now this becomes liable for GST. Now the whole issue is that whether that the whole piece of land, is it something that I can say I'm using for furtherance course of business? Those aspects will come into play. And secondly, immobile property. Again, when you're talking of construction, what happens is once we take that assigned piece of land and there's a factory building which is constructed on that, for example, that comes into question. Now, then you could say how much of that is for factory building and how much of that is for plant operation is all the whole, issue in terms of the numbers and structuring and backup and document that's going to come into play, which is why I personally feel there could be an issue here that when I take the land, then assignment of leasehold, if I am one who's going to take it on lease, if there's a factory building constructed, that becomes clearly mobile. Then the proportionate area of that could also be questioned, is my view, which is what I thought I could bring it on the table. Yeah, I think that's more or less on the question that I had here so far.
So there is no more question answer, I think so. Good evening, everyone. It has been such an honor to be a part of this wonderful event. On behalf of the organization, I would like to extend my heartiest gratitude to our esteemed faculty or speakers, Mr. Neeraj Menon, sir. Thank you. Sincere thanks to the head of the various departments who handled the event throughout. A wide round of apologies to and thanks to all the participants who made the event memorable one. Finally, I would like to thank all of your presence here to making this time to be there with today and helping us make the event a great success. Thank you, one and all.
Thank you so much. Thanks.